Hi everyone, it's the end of the week, Friday the 30th of July 2021. We're taking a quick look at the markets today and a bit on e-commerce companies. Is growth slowing? And what we can expect for profit reporting season locally with a number of big dividends already announced. But first, the Australian share market down 0.3%, 7,392. Fortescue down about 5%, giving back much of yesterday's gains. That's on the back of a lower iron ore price overnight. BHP, though, hitting another record. And we saw the banks, they were mixed. NAB rose, though, because it said it would buy back around $2.5 billion worth of shares on market, which is good news and says good things about the sector. So for more on all of that, I spoke earlier today with Elizabeth Tian from Citi. Liz, what's driving the market today?
Our market's very flat at the moment, Ricardo. That's really been held back by offshore. Two things happening. We're seeing a sell-off in Asian markets. It's been very volatile week. China really clamping down with regulation. So big sell-off in Asia throughout the week and again today. That's holding our market back. And the other thing is US futures. All three of the major indices are in the red, and that's putting a cap. We're not seeing any gains today, despite some fairly good news around.
Can we focus a bit on technology and the e-commerce space? So overnight, we heard from Amazon in the US, good numbers, but missed expectations. PayPal has flagged slower US growth rates. So as a result, we're seeing technology and e-commerce stocks in Australia down. With global economies reopening, are consumers starting to return to some of their old habits? And what kind of a role do you think e-commerce companies will now have in the future?
It was very interesting, the Amazon result that came out. We actually saw Amazon share price down 7% thereabouts in aftermarket trade. And that's part of the reason why US futures are down, NASDAQ futures especially down over 1%. And that's been reflected today in our markets. We're seeing, as you say, Afterpay, PayPal, all selling off. Now, a lot of these tech shares have been priced to perfection almost. We've seen very strong gains, especially, the US tech stocks in the last 12 months since the pandemic. They've done very well out of COVID. It was quite interesting. We had, we did a bit of a big deep dive into technology, into the big top 100 companies globally on what they were doing. And the two biggest spends in technology will be number one, IT security, and number two, digitization. And we're seeing that across the board, in Australia, companies really trying to digitize. So what's that going to mean for Australian companies? Obviously, some companies are very well placed for that. And going forward, though, some of the buy now, pay later today obviously been sold off. But, in that retail sector like Amazon and PayPal, etc., we really think that we still like retail. We think they're really set going forward, to make use of this technology. And we see, it's one of the sectors we actually like going into this reporting season.
Speaking of reporting season, shareholders, are they in line for really big bumper dividends and returns? Because we saw Rio Tinto earlier this week, $9 billion returned to shareholders with dividends. NAB today is saying it's going to buy back on market around $2.5 billion worth of shares.
Yes, going into this reporting season, we actually think a lot of the earnings, around half the earnings from our market's going to come from miners, and that's huge. Obviously, with the Rio dividend and Fortescue paying out huge dividends, it's actually very interesting. If you go back, more than a decade, miners weren't big payers of dividends, but now they're sitting, some of the big miners are sitting on double-digit yield. And in this world where it's very hard to find yield, that's going to continue to underpin the performance of some of the miners. NAB obviously announced its buyback. Now that came on the back of the ANZ buyback, and we think that Commonwealth Bank will also announce one within, about a $5 billion buyback, and Westpac. And what that's really showing is it's showing that despite this second lockdown in Sydney, we had it in Melbourne, etc., the banks are very well placed to return capital back to their shareholders. And that's very different from 12, 15 months ago, where there was a lot of worries about banks, the capital position. It's very different this time around. It shows that the banks and APRA don't think this is going to be a credit event, this, very extended lockdown down in New South Wales. And, we're likely to see banks continue to pay dividends and these capital returns.
Elizabeth Tian there from Citi. Don't forget, you can listen to this as a podcast on Apple Podcasts, Spotify, and on the SBS radio app.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.